Namaste, welcome to Arthaniti. SVB, not Shamrao Vittal Bank, but Silicon Valley Bank has been in news for the last few days. It was shut by the US government following a run on the bank. Now, in this video today, we will see what exactly happened with Silicon Valley Bank, how did it come to this scenario, and can such a thing replicate in India? Let's start with the first part of the video. What happened with Silicon Valley Bank? Now, if you take any bank for example, the business of the bank is to accept deposits from people like you and me, companies, in various accounts like say savings, current accounts, fixed deposits, right? These deposits collectively are deployed by the bank in the way of loans, that are various kinds of loans that the bank gives, or by way of investments in government securities and bonds. Correct? So the bank earns interest on the loans and the investments that it makes, and it has to pay interest to its depositors, savings and fixed deposits. Right? So the gap between the two is what is the profit a bank makes. Now, this is the business of the bank world over. Correct? With SVB, most of its depositors were venture capitalists and crypto companies. And the investments that the bank made, it had a very low loan book, in the sense it did not loan out most of the deposits that it accepted. What it did was it invested those deposits in bonds and securities. A major chunk of investment by SVB, Silicon Valley Bank, was in mortgage backed securities. Okay, now look at this scenario. In the past 1 year, the Federal Reserve has increased interest rates from a near 0% to 4.5% in just 1 year. This steep increase in the interest rates was done to contain inflation by sucking out liquidity in the market and keeping inflation in check. Now, because of this steep rise in the interest rates, the value of mortgage backed securities fell sharply. Why did it fall down? See, basically because old securities which had a lower interest rates had become less valuable. Why? Because the new ones which were available in the market were available at a higher interest rate. That is why the price of the MBS, the mortgage backed securities that Silicon Valley Bank held, fell down. Correct? So, what happened was their investments did not garner the kind of returns that they were expecting. It were their investments was losing money. This happened on one hand. On the other hand, because of this rise in interest rates, as I told you, liquidity gets sucked. There is lesser liquidity in the market, and the venture capitalist scene also suffered because of this. What do we say, the funding that venture capitalists normally do to startups also dried up, so their deposits. So understand the scenario. Both ends of the pipe were choked for SVB. They were not getting returns on the investments that they had made, and the deposits that the bank would get from startups, venture capitalists, also dried up because of this rising rate scenario. So, the liquidity position of the bank hit majorly. So this was the first reason. The second reason was asset liability mismatch. Now, where most of the deposits that it had with it were for a short period of time, the investments that SVB made were in long term deposits. So, where the people expected to get back the money in short term, SVB had invested those funds, locked in those funds for a longer period of time. So, this caused asset liability mismatch. Correct? In India, we also had similar situations where a few banks have gone kaput in the past. Yes, a very recent example was of Yes Bank, which had to face a bank run because of bad loans that it had given. Then there are other cases like Lakshmi Vilas Bank or Punjab and Maharashtra Cooperative Bank, where also because of the bad loans that the bank has given, they faced liquidity issues. Correct? Now, see, so the first risk was rising interest rates, and it dried up their returns on investment as well as the deposits that the bank was getting. The second, as I told you, was an asset liability mismatch. The third was concentration risk. See, in the sense, what happens is when you go to the bank to withdraw some money, yeah, not all the bank customers go to the bank all at once, correct? Because if that happens, it will be a run on the bank, correct? There are different durations for which the bank has invested the monies that we have deposited with it, and it is the confidence with which the bank runs its business that we get our money back on demand. Correct? Because not all depositors go to the bank all at once and withdraw the money that they have kept. Right? Now, with concentration risk at SVB, what I want to tell you is most of the accounts that SVB had, as I told you, were of startups and crypto companies. Now, these startups were different entities and they had separate accounts, but most of them were funded by a handful of venture capital companies. Now, this trouble had been brewing with SVB for some time now. Many of these companies had asked their startups to shift their funds from SVB to other banks to be on a safer side. Correct? So, when this happened, major chunk of their depositors major chunk of their depositors demanded their money back, as they wanted to shift it from SVB to a larger bank. Correct? So this caused a run on the bank. Right. Now, one more thing that you should know is that in the US, banks which have an asset below 250 billion do not have to face stringent regulations, right? So SVB had maintained its assets just below that mark to face easier regulations, right? All major banks, say Citi, or you take for the example of JP Morgan, all are bigger banks which have to face stringent regulations, I'm sorry, as their asset base is way above the 250 billion mark which is set by the government. Correct? One more shocking revelation that was made was that, see, when you are into a business of giving back money on demand, and when you are in the business of managing people's money, risk is an inherent factor. Correct? A managing risk should be your topmost priority. But with Silicon Valley Bank, it did not have a chief risk officer for the past several months. So, this lethargic approach from inside as well as ignorance from outside, I told you it was not heavily regulated. Also, it procured high ratings as one of the best banks in the US from the likes of Forbes. Correct? So, there was some percentage of overlooking which happened from inside the bank, where there was no chief manager in place, as well as from outside the bank because of lower regulations, because the level at which the bank was operating. Correct? So, but this cannot be a reason for the bank to face problems the way SVB did. It was sheer mismanagement on the part of SVB bank's management. Correct? So, these were, some of the reasons that caused the downfall of Silicon Valley Bank. Now, in the US, the deposit guarantee that the Federal Reserve gives is up to $250,000 per person in a bank. Correct? Most of the depositors, Meghan and Harry, were said to be one of amongst the depositors who had more than $250,000 with this bank. Correct? The Federal Reserve had to step in and has secured the deposits of all the depositors, but the shareholders of these banks will be at a total loss, right? So this is what happened with Silicon Valley Bank. Now let's come to the second part of the video. Will this replicate in India? Well, regulations in India are quite stringent, and the way RBI has tackled the inflation problem and gradually increased the interest rate, plus the regulations that are in place in the Indian banking system, we are in safe hands. Correct? But you should know that the deposit guarantee scheme in India insures your deposits up to 5 lakh rupees per person in a bank, right? So see, no one wants such a thing to happen. And when credit rating agencies are saying that the bank is good, and the bank can still face problems in a matter of 48 hours with online transactions, yes, shifting money from one bank to another is a matter of few seconds. Correct? So SVB took only 48 hours for its downfall. Correct? In India, as experts have said, we are in safe hands, but we should know uh, like the limit up to which our money is insured by the government, and we should take steps in such a manner that we are secured by that insurance that the government gives, right? So I hope this video has helped you understand the SVB crisis and take decisions about which bank you bank with, what is the insurance guarantee that the government gives, how you can avail it, right? So I hope you have liked this video. If you have, please hit the like button and subscribe to my YouTube channel for more such informative videos. Until next time, be safe.